I promise you guys I am not a bear. But all cards on the table, things are looking pretty bleak. Let's take a look at why. Hello, welcome to Big Wick Energy, a 100% automated copy trading bot fully managed by the Block Party trading team. It's exclusively available on Mizar, and if you want to get access, just head on over to mizar.ai, check out the marketplace, and we're right there. If you want a truly set and forget experience with automated trading, then this is for you. There is no monthly subscription. We only get paid if we win. Don't forget to like and subscribe. It helps us grow and bring you more awesome content. Enough yapping, let's get into those trades. As always, let's start off with BTC to find out what the king of crypto is doing. And if we can sort of establish what it might be doing or where it might be going, then it can help give us an idea of what trades we're going to be placing. Now, right now, it is not looking too good. Like I said, we'll have a look at some of the more outlying factors as to why we are looking a little bit bearish at the moment. But on a surface level analysis, we're currently going through a bit of consolidation at the just below the lower midway of this ascending wedge. Now, ascending wedges are just bearish patterns, certainly in a downtrend, and they basically are just one long running divergence. And as you can see just down here, that's kind of what this ascending wedge pattern is showing you, is displaying basically. Now, obviously, we can't confirm it's going down. We're in a consolidation period, and this generally means that volume is somewhat going down. What is significantly bearish about this immediate short-term movement is that we're sat right below a local resistance, and we're currently battling to try and hold the 24K. So what usually happens after this consolidation period and a diminished volume like this, we usually see a big spike and a big move, and there's often quite a lot of opposing volume to stop it. That's why we see these big candles going in a direction. And this, I'm being honest, is what it's lining up to do. Now, it is Bitcoin, guys, so don't go betting the house on it yet, because it does do outrageous things. Anything can happen. Any whale can fat finger a trade, and we could be up to 27K by the end of the day. But we can only base it on what stuff we have in front of us, historical data, probabilities, and that's what I'm doing. So outside of technical analysis, what are the key things that we got at the moment? Well, we'll have a look at some other timeframes as well. There's not really a huge amount of news that's tipping the scale one way or another. Yes, the Fed has started to give some more clear outlines on how crypto banks can become more major banks. It's great. Huobi has now banned derivative trading in New Zealand, but nothing to write home about. So what are the other factors that are going to be implying this bearish move? Well, we can take a look at the daily, and we're seeing an exhaustion candle appearing, which is not ideal, and especially on the day. And also we see an alpha wave peak as well. These things are pretty damn strong, especially on the daily time frame. Another significant signal, which is not fully confirmed yet, but we're seeing a TD6 appear, and usually it's a TD9, but TD6 onwards, I can generally seem to use TD6 onwards. I will generally use that a potential reversal is incoming. So any other outlying factors such as resistances or support can really help support this, even though it's not that fully formed TD9. Other thing as well, we have a McFly incoming signal. This is on the weekly, guys. So whilst it is an incoming signal, this is quite significant. When we see one up here, it absolutely smashes it right down. But we're now seeing a bearish one. So there are a couple of things that are happening on other time frames that are worth being aware of, but probably the more significant stuff that's going on at the moment is actually the more crypto sentiment stuff. Now, most specifically in the alt market cap right now, we're not looking too good. We're in this ascending wedge, very similar to Bitcoin, but we've also got this long-term downtrend, and we're coming right into resistance with an ABCD pattern, which is not good. So I think we're going to drop down there. Now, what that means is as money is going to flow out of the alt markets, it's either usually going to go into BTC or USDT, because this is not including BTC, but it is including Ethereum. But that does also mean that it's got to go somewhere. And like I said, the most likely place it's going to go is either in BTC or USDT. Now, I'm not just saying all in USDT, but this could include BUSD, USDC, or USD. whichever stable coin really is your preference, but USDT being the biggest one gives the most likely comparative inflow of money going into a stable coin. And what we're seeing right now is a horrendously bullish pattern appearing with USDT here. And this is what's called a descending wedge, and we're going straight into the 200 DEMA, along with one of my favorite ones, which is this breakout of a descending, as you can see there, it's just starting to breakout of a descending trend line on the RSI. It's how I actually create a lot of my hodls. So with that happening, we're expecting this to go down, USDT to go up, that's lining up pretty perfect, and of course BTC as well. Now, I don't feel BTC is going to get hit as hard as some of the lower cap alts. In fact, most of the higher cap alts are probably not going to get hit too aggressively hard this time around. I do feel like the lower cap alts are going to get smacked. And inversely as well, as you can see here, we've got an ascending trend line, and we're looking to break down as well as it being oversold on the RSI. Some very significant bearish factors for the alt market cap. The CME, I'm using the futures CME on this Bitcoin chart. You can actually follow these charts if you want to join our channel, and you can have these charts in front of you as if it was you trading them, which is pretty cool. I love that about TradingView. And what are we looking at Bitcoin? So from a macro perspective, it's not looking all that bad, to be honest. Yes, okay, so if we do come crashing down on this ascending wedge that we've just looked at on the 1 hour time frame, then we could see probably a max pain price. I know it looks scary at about 15K. We realistically won't get down that far, I feel, not without some pretty horrendous FUD that comes out. I kind of feel like we're all FUDed out, touch wood, obviously, but there isn't so much more that can be thrown at us at this point, surely. But who knows? It is Bitcoin and it is crypto. But I'm using the CME chart because it's great. It shows us these CME gaps, and CME gaps are quite significant in pretty much always being filled at some point. So they give really, really good targets. And the reason for that is a lot of other people are looking at them as well, not just us. But what I'm more excited about in the whole kind of grand scheme of where we are with Bitcoin is this long-term descending wedge. And we are nearing the end of it. As you can see, this whole cycle, we've been in it since, well, I say we've been in it, but since the 8th of November is where that downward trend started. And we're, like I said, nearing the end. So once we get to, if we do hit 15K, not ideal for a lot of us, probably screw a lot of these lending platforms, not gonna lie, if they haven't sorted their balances out. And we could see some real bad capitulation, but, based on a lot of the on-chain stuff, the longer term coins are starting to take hold now. They've stopped moving, which is great. People are stopping selling from the longer term held coins, or hodl waves, if you will. So that is quite positive all in all. Lastly, we've got the Bitcoin dominance down here, and we have been in a pretty steady channel now, which is pretty good. This is really where we want to be seeing Bitcoin in the whole world of dominance. We don't want it to be getting too out of control or upwards of this like 70% region. That's just not really good for anyone, because Bitcoin will just destroy the market whichever way it moves. Since we're now below below 50% significantly, but we're at about 40%, 41% as it stands at the moment. That's quite nice. And I think providing we stay below 50%, then it gives the market quite some decent breathing space. It means that there is a lot of interest going into other alts, and it makes it a little bit more exciting and fun for trading in other altcoins. Just makes everything generally more stable. But as I said, as Bitcoin dominance goes up, that's quite significantly bearish for the rest of the alt markets. And what that basically means is all of these are relatively in confluence, and it shows you the flow of money. So for example, money moves out of alts and it goes into either USDT or Bitcoin. Now that is why the dominance is going up, because if the money is coming out of the alts and some of it is going into Bitcoin, not all of it going into USDT, that means that the dominance comparatively to the alt market is going to move up. So whilst the dominance of Bitcoin is moving up, the price can easily be moving down. The ideal scenario of what we always want to see is dominance going down. We want to see USDT dominance going down. We want to see the alt market cap moving up, and we want to see the BTC price moving up. When we see those four in confluence, then that's usually a really good sign of a pretty healthy and strong bullish move. But we're not seeing that right now. In fact, we have seen it a little bit, to be honest. Like, as you can see here, we see the price moving up as the dominance is going down, the alt market cap's going down, and USDT is going down. So that's kind of a quite significant move. And in that time period, the price did move quite a lot, 26% on BTC, which is excellent. But we are now facing a lot of bearish factors. As I said, we could see some amazing news and it could pump right through. But a lot of things, such as like even the DXY, is not looking particularly great with that pumping up. It's bounced off a nice double bottom. And when that goes up, historically, Bitcoin goes down and vice versa. Again, not set in stone, but these are kind of key markers to look out for. So all that being said, we are kind of expecting a bearish move. Now, where it stands at the moment with the general allocation and exposure that we've got in the block party portfolio, it's sitting at around about 18.5%. With yesterday when I did this, around about 3 of those tokens were short tokens. I've now added 2 further short tokens to the portfolio, and also we've closed XMR, which is amazing. That's exactly what I wanted to see. I wanted to get a crazy little pump like this. We closed it early at around about here, which is quite nice, just because we're coming into the 200 EMA. So I just figured, let's get out of it. Generally, I'll close a lot of trades if we get within 1% of the TP. Because why not? You know, we trade loads with this. The DCA structure and this bot structure gives us the opportunity to pump out loads of trades and be a little bit knife catchy without really too much risk. Of course, there is always risk. Where are we at first of all? So ApeCoin, none of these assets are going to be having a particularly good time, and we are expecting a bit further downward movement. So for that reason, I'm not committing to any further safety orders until we get a bit of a better and stronger confirmation of a bounce. So ApeCoin is actually in a descending broadening wedge, which is pretty bullish, and we have about 80% chance of coming out the top of that. BNB down is the first of our down tokens. Now with all of our down tokens, because of all of these bearish factors, I actually went ahead and was quite aggressive, and I added a 4th safety order to these, which now puts us within touching distance of 12%, which is a 4% BNB drop to get us to break even. BNB is actually holding pretty well, kind of thing. We're still within 1 safety order of this trade. We've got a whole way to go down there, so we probably won't hit that safety order if I'm being completely honest. Equally, BTC down is a new token. Obviously, if I think BTC is going to be going down, we've got all these factors going down, why wouldn't I open a short trade in BTC? We've just looked at BTC analysis, our actual kind of running trade, which has been going for quite some time, still hasn't hit any safety orders, which isn't unsurprising for BTC because it doesn't move. A 10% move is a big move. We just missed our take profits. Realistically, if this gets back into the profit at any point, I'm probably going to close it and just start to free up a load of active deals. I'm not too interested in maybe taking a 0.5% loss on that. Don't think anyone really cares. EGLD, good asset. And this is quite an important point, actually. So our new default safety order 1 has been moved to 7.5%. So I noticed we kept on coming into a lot of trades like this. Generally, I operate to around about 7.5%, between 7.5% and 10% stop loss for a lot of the trading that I do within the 1 hour and 4 hour time frame. So I kind of figured I'd be a little bit more cautious going into this. Obviously, we were in a bear market when I first started this block party portfolio kind of trading bots and everything. But yeah, the reality is, I think, you know, we can be slightly more aggressive, and now it's 7.5%. And I think with that in mind, you know, when we do get these kind of wicks down, these little moves down, it's going to be a little bit more aggressive because I can still be very, very conservative with the following safety orders. I was debating 5%. Maybe I will move to 5% when we start to get into some really serious bullish territory, and it can help close the trades quicker, but also increase the actual volume of capital in the trades, thus increasing the actual profit in the end of it all. And little things like that as well. We can actually afford to move the take profits down and be more aggressive, but we're still making the same amount of money. So it's always worth applying certain strategies to certain markets, because that's kind of how you maximize profit, but also, you know, really kind of guard your exposure and guard your allocation that's in there. Next up, EOS had some news. It was a TVL yield thing off the top of my head. So let's just kind of play that out again with any news-based things. It doesn't feel like it's had a significant bump. That would have been the announcement of it, but the actual fundamental value of it hasn't kicked in yet. So as we saw with XMR, the privacy coin, everything like that, that's clearly now kicked in, and things are starting to happen with that now. And I think we'll see the exact same with a lot of these news trades as well. You know, we had a trade in SHIB, which I regretfully didn't increase the TP to, and that's gone absolutely crazy. ETH down is our new down as well, our new best. ETH down is our new short token trade. We've only got BTC and ETH down that we've added. In fact, the only one we are missing is actually ADA down. But in the same breath as well, I'm always a little bit cautious being too overexposed or too hard into short tokens. If we didn't have 3 of them at safety order 4, then I probably would have them all 6 open. But we do, so whilst everything is saying the market is going down, you should never really put all your eggs in one basket because it can screw you a little bit. Inherently, shorts are the risky side of DCA trading because there is no upper limit. With longs, you can pretty much always get out of them at some point, unless, you know, there is a lunar scenario where it just literally goes to 0. But, you know, it happens so rarely, and realistically, there is very little we can do about it. And unfortunately, these are just some of the pitfalls of trading, especially in crypto. So not a huge amount we can do about that, but all what we can do is still be very sensible with our exposure. Phil, it's actually been holding pretty nicely. I thought this was going to go down pretty hard, but given the actual trajectory of the current market, this is looking pretty nice. HNT, not looking ever so great. We really wanted to break up here, but again, like with anything, we're pretty much near the all-time low on that. So, and JST, very sad we just missed our TP there, but we're pretty much at break even. Again, that might be another one of those trades that I'm just going to close at a teeny tiny loss so I can reduce my long exposure. KDA, not doing a great deal. We're on safety order 2. This is just descending down. What I do like about what this is forming is a bit of this descending wedge. So as we know, and as we've seen in a lot of trades, a lot of the time assets break out of these with quite some volume. We do have a full weekly pivot up here, which we need to fill. So all in all, technical analysis wise, it's actually looking pretty good. Play made an attempted return up and it got smacked back down. And I feel that's exactly where the market's going to be going. LDO, great asset, a load of eyes on it at the moment. And we've got this descending, it's kind of a descending wedge if you take out this little blip just here. And again, with these descending wedges, they're just so great. You know, they kind of break out and they always come up with some venom, especially when you've got that descending volume in there as well. Link down, one of our previous trades that was causing us a real headache. We added in a safety order 4 just there to be a little bit more aggressive. And yep, that's great. We're now within serious touching distance. If Link goes 3% further down, then we're back into profitable territory. So it's always interesting, you know, this is the power of DCA, just how much we can bring those prices down. LPT, my FOMO trade, is actually looking surprisingly good. I'd love to say this was intentional, but we are back in and starting to try and break out of this ascending triangle. Given the actual current state of the market, I'm super impressed with that. We'll see how this plays out. I'm not going to be committing really anything more to this. We've got a safety order 3 down here. So let's just see where that goes. We did have a weekly pivot, which is quite nice. Mana, I just have zero worries with any of these metaverse tokens at the moment. I really feel like the metaverse is going to be, you know, the NFTs of, you know, the SHIB, the Doge, the NFT, the whole DeFi thing, like of those fashion trends of crypto, and metaverse is going to be, I know we as crypto enthusiasts and traders are kind of probably sick to death of it and bored of it and just so used to it, but the reality is the mainstream really aren't. So I do think that that is just, you know, it's going to be a home run. Mina, still very disappointed with this one. I was expecting a little bit more from it, but it absolutely stacked it down. And again, we're not going to overcommit. We've filled one safety order. Our safety order 2 is quite low down because I'm not feeling terribly confident about that setup, so we'll see how that goes. Sand, very, very similar to Mana, just not in any way bothered. We haven't even hit safety order 1 yet. We have this, you know, relatively consistent downward wedge across a lot of assets. So we're just about finding the bottom of that and then breaking out. Sol has been looking very, very good. So it got slapped down in the most recent thing. All of these high caps are going to be following Bitcoin quite closely. SRM or Serum, another one of those good projects. You know, like everything we do trades in the block party portfolio are within the top 100 non-stablecoin assets. So there's nothing here that's I'm gonna be super concerned about. We are now nearing this very strong support down here. Sat at around about 1024, which is not far off a big psychological $1. And we've got the 20 and 50 DMA and coming towards the end of this wedge. So I do expect we are going to come out of this, but it really does depend what happens with Bitcoin and which route we go. If we are to smash down, then a lot of these could be invalidated. But I think we'll flash down, probably come back, and then start to break out. But again, I do think short term we're going to be quite bearish regardless. Which, yep, we now come back to TRX, another one of our down tokens. Look at that, within 12%, which is 4%. So if TRX crushes down 4 more %, then we are out of it. XMR was one of our nice little winners. Came up, and that was purely news-based. News came in, and we closed the trade in a nice profit. XRP has maintained a very good stability, really in pretty much every chance it's had to try and break up, it has done, but Bitcoin has kept it, slapping it down. So one of these trades I might actually close and look for a better position. There's a few trades I'm probably going to close, which is BTC, JST, and also XRP that are all at around about break even, just to alleviate some long positions and focus on the shorts a little bit more. That pretty much concludes everything, guys. It's a bit of a longer video because we did have a lot to talk about. Obviously, we never want to go into any bearish or FUD-led video without giving full explanations as to why. So hopefully that gives a bit of context as to where we're at in the market. Of course, you can actually follow along with this portfolio on MyZar. It's exclusive to that. It's called Big Wick Energy. If you like this content, then please give us a like and a subscribe. And also, we have a totally 7-day free trial to our premium channels, which has loads of awesome content, and we can help you out with your day-to-day trading from there. See you later.